in EU as well and in US as well, we are seeing stocks getting adopted. But for some reason, we are not seeing the hard assets like real estate, wine collections, or maybe antiques getting picked up so well as compared to the money markets. I can say maybe bonds, treasuries, or stocks. So what do you see is lacking there, which is actually kind of delaying the tokenization and fractionalization of these hard assets actually, like real estate.
Well, real estate, while it could be tokenized, for example, real estate, could be tokenized. Of course, real estate is very complex because it has to deal with property laws and deeds and notarial acts that often go back generations. So in developed urban, take urban areas with centuries of history, it's very hard to move from a traditional ownership structure into a tokenized ownership structure. And what are these tokens? Are these tokens natively the ownership titles of this property? Or are they just, do they represent a claim that somewhere sits in the operational system? Where we see, if I scan around the world, for example, if we see greenfield developments of real estate, for example, in the Middle East, you see much more potential because there's not a lot of history. They build new cities, the infrastructure's essentially in the desert, so there's no long history. So that you see potential there. But really, if you look at tokenization, my personal view is that everything can be tokenized.
Hello everyone, welcome to yet another episode of Voice of Web3 powered by CoinGape Media. Our guest today is Peter Kerstens. He is widely recognized as one of the primary architects behind the European Union's groundbreaking digital asset framework. You all must have heard about MiCA, you all must have heard about DORA. These all terms have actually been done in the EU as part of the regulation for cryptocurrencies widely. Our guest today, he is also popularly known as father of MiCA, the markets and crypto assets regulation. And we are very privileged to have him today to shed some light on the prevailing laws, regulations around cryptocurrencies, the upcoming frontiers in the space. So he's the right person to guide us there. Hello, Peter. Hi, how are you?
I'm doing fine. I'm just back from holidays, so I'm ready to go.
Yeah. I mean, it's summer holidays in Europe. Yeah, busy time there.
Yeah.
So yeah, I'm also due for it. I'm actually traveling there, I guess, towards the end of the month to France, particularly, and Amsterdam, and I guess Lisbon.
Very good. A tour of Europe.
Yeah. I mean, people in Asia always, they always fantasize traveling to Europe. So, Peter, of course, I mean, you have done a lot when it comes to regulations, compliance around cryptocurrencies, helping entrepreneurs, helping startups to navigate that how to actually establish businesses in crypto in Europe, particularly. So, we wanted to know a bit about your journey as well. How did you get into digital assets, particularly? What was your early job look like, and what today you are doing?
Well, I am a career civil servant at the European Commission. I have been 30 years at the European Commission, being in very different policy roles across a number of sectors. Most of my career I've spent in financial services, but I've also worked, for example, in food chain security, in public health issues. But in financial services, I have been leading the European Commission's work on technological innovation and digitalization since 2015. And I started off on cybersecurity and cloud computing. But if you take an interest in technological innovation, it's only a matter of time before you come across blockchains. And for me, I came across blockchains early 2017. That was the first time I ever heard of Bitcoin and blockchains. And because of my background in financial market infrastructure and payment systems, I saw immediately enormous opportunities in this technology for replatforming our financial markets and bringing them into the 21st century, basing them on 21st century technology. And so from there, we kept going. Initially, there was a lot of resistance to digital assets, to crypto assets. People said, well, this is all going to end in tears. This is all speculation. It's all money laundering. It's all crime. And I said, well, there is some of that because great opportunities also attract people with less good intentions. But we should not um, shy away from the fact that yes, this technology can be abused to throw away this innovation. This is really a powerful innovation. So we set out from early 2018 onwards to say, well, can we bring some order in this market to exploit the benefits of this technology for European financial markets? And that's really when ideas for what eventually became MiCA were born. At the back of the first very big Bitcoin wave, there were lots of initial coin offerings at the time, which was all very interesting as ways to raise capital. Um, the appetite, the political appetite was limited, but then we really started going in the course of 2019 when Facebook announced Libra, this idea of a stable coin that was going to be backed by a basket of currencies. And that created a bit of a panic among policymakers and politicians because up until then, they treated digital assets a bit like, well, this is too small to care. This is not an issue that's of any relevance. We are not going to spend any time on this. And now you have a global social media company with 2 billion users wanting to develop a payment system
Mhm.
integrated into its social media and base it on a digital asset, a stablecoin. And that really, really focused the attention of politicians. And that created momentum and urgency for us to develop a regulatory framework to, on the one hand, enable this development in the European market, but also to frame it and to sort of turn it from the Wild West into an organized West, I would say.
I mean, looking back, of course, MiCA has been a huge success. Most of the other regulations, jurisdictions, they are now following the playbook of MiCA in one way or the other way, if we can see it. But looking back, what are those some of the, let's say, key movements or achievements you see that MiCA has achieved in the last, let's say, few years that would have otherwise been not possible if MiCA was not there?
Uh, When people talk about MiCA, they often focus on the parts on stable coins.
Yeah.
That's where most attention goes. Personally, and this is my personal view, I think that the parts in MiCA that deal with crypto asset service providers are actually much more important because if you think about it, most
Mhm.
users of crypto assets have no dealings with issuers of stablecoins. You
Yeah.
only if you engage with digital assets, you
Mhm.
either engage with DeFi protocols if you're computer literate, if you're sophisticated, or you will deal with an intermediary, a crypto asset service provider, a broker, a trading venue, a
Mhm.
custodian, and so on. And to create legal certainty, but also to create trust among the user base, you really have to make sure that these people treat their customers correctly, that they
Mhm.
are subject to prudential and conduct regulation, just like any other financial services provider is subject to prudential and conduct regulation. So I think that really sort of mainstreaming
Mhm.
um, the digital asset ecosystem and moving it from a bit of a shadowy environment into the regulatory sunlight, I think, is the main achievement of MiCA.
You mentioned stable coins, and finally, I mean, we are seeing that stable coins are becoming the most debated use case of cryptocurrencies, and it is actually quite remarkable as well. We can do a lot of real-time settlements. Moving money globally is becoming quite easy because of stable coins. And when we talk about EU, we do see a lot of private stable coin companies launching their own stable coins. Do you also see a possibility of a sovereign stable coin coming out of EU, or do you see countries also finally realizing this and coming out with their own versions of stable coins?
Well, a public stablecoin is definitely possible. Some countries have ruled it out. I think it is a possibility. At the European level, there's a lot of talk, of course, about a digital euro, a retail digital euro. but that's not for the time being going to be modeled on blockchain technology. So it's another initiative. So that's not really, in my personal view, something that's going to compete with private stablecoins. At the wholesale level, we do see a lot of developments in central bank digital currency for settlement purposes. And there I do see public money sort of competing with private stablecoins. Because if you look at financial markets, wholesale financial markets, I'm not talking about retail financial markets, but wholesale financial markets, they need vast amounts of cash and settlement instruments. And they need what we call a lender of last resort. And private issuers may not have the elasticity and the capacity to issue enough stablecoins necessary to meet the demand of wholesale markets. Traditionally, this is the role of central banks. And personally, I do not see why in the future, when more and more real world assets will be tokenized, when equities will be tokenized, when bonds will be tokenized, when derivatives will be tokenized, why central banks would not want to play or will not need to play their traditional role and provide cash settlement instruments for these markets. So I do think that we will see central bank money in across the world in these markets, and that will be very stiff competition for stablecoins, because while stablecoins, if they're properly regulated and they're fully backed and so on, do not really present huge risks in my view, they still hold some risk, whereas the only risk-free asset in our book is central bank money. That is a really risk-free asset. And financial markets do not really like risk in their settlement instruments. They want their settlement instruments to be risk-free. So I do think there is enormous potential for central bank digital currency, if not for payment purposes or not in the EU, certainly for settlement purposes in financial markets. In other jurisdictions where the banking rails may not be as developed, or where cross-border banking rails may not be very functioning well, or where lots of big parts of the population do not have access to banking rails, I do see huge potential for stablecoin-based payment systems. And then it's a question as to whether or not the central banks in these countries are tolerant of these stable coins being probably foreign denominated, probably dollar, maybe euro, who knows, or whether they say, no, we rather have local currency, because otherwise you're going to see huge dollarization in those economies. But that really is a matter for local and regional central banks to determine. I'm just an observer there. I do not pass any judgment as to what they should do. Everyone should decide for themselves what is most suitable for their country.
I mean, in the US right now, Clarity Act is becoming the buzzword there. I mean, there is a lot of debate going on that once Clarity Act is passed in Congress, once it is signed by the US president, there will be a lot of clarity around particularly stable coins in US. I mean, when we compare the progress that the regulations in US have made as compared to, let's say, EU, Clarity Act seems to be something that is, let's say, I would say, quite innovative at the moment, because it is allowing banks versus private stablecoin issuers to have their boundaries, to have their guidelines. Do we foresee something in EU also similar, some law or something like that, which will finally provide clarity to, let's say, private stablecoin issuers versus the sovereign players like banks or central bank? Or, I mean, you can correct me also if there is something already that governs it. I will be happy to be corrected.
Well, I personally, I think that for the time being, the US is still in catch-up mode. So they've done Genius, which covers stablecoins.
Yes. Mm-hmm.
The Clarity Act is about market structure. And while there's a
Mm-hmm.
lot of debate, it's really about the part about crypto asset service providers and how the intermediaries operate. And
Mm-hmm.
while there's a lot of debate and a lot of progress, the act is not yet adopted, it's not yet voted on, for example, in the
Yes,
Senate.
yes. Oh,
And
yes.
the adoption window is gradually closing. I do not know whether they'll make it or not. I hope so, but we'll see. So, but if the Clarity Act gets adopted, Yes, some would say that with that the US would sort of jump ahead of the EU in terms of its regulatory framework and how pro innovation it is. At the same time, we have just launched last month at the European Commission our consultation on MiCA. And people say, well, some people say, oh, the Commission does that because MiCA is not working. That's not correct. MiCA is working very well, but MiCA was designed, as I mentioned, in 2018, 2019, at a time when crypto markets looked very differently from what they look now. And the reason why we did this consultation, or we're doing this consultation, and we're looking at, well, what's next, is to make sure that our regulatory framework that we have is fit for purpose and reflects market realities, because the markets are moving and takes account of regulatory developments in the rest of the world. The reason why we start already now is that our processes take a long time. Um, from the moment we set at updating a legislation, you're quickly looking at 2 to 3 years at least before that legislation is enacted. So if we need to update, then we don't know yet whether we need to update the MiCA regulation. That's really the subject of this consultation. But if we do need to go to a MiCA 2 or something else or a next stage, we have to start now. But again, not because there's something wrong with MiCA 1, but because this market has moved on. For example, when MiCA was designed, there were no NFTs. When MiCA was designed, there were no meme coins. When MiCA was designed, there were no perpetual futures. When MiCA was designed, there were no prediction markets on blockchain. All of these things are new developments. Some have staying power, some do not. And so MiCA really was designed with spot markets for crypto in mind, because that's what the market was all about. If I look at crypto markets now, the spot markets are relatively flat, and it's all crypto derivatives and perpetual futures. Is this going to stay? Who knows? But of course, we have to make sure that our regulatory framework captures market realities. And if the markets move beyond, we have to make sure that we stay along with that. Go ahead with that. So that's really the purpose. So yes, we had first mover advantage, but also first mover disadvantages. Of course, if you come as a jurisdiction a bit later or after the EU, you can take lessons. You can take the good elements of MiCA, but also take advantage of more market developments and more insights and more knowledge and innovate on top of that. And this is an iterative process. And we see this also in other areas, like in other areas of financial services regulation, we have MiFID 1, MiFID 2, banking regulation 1, banking regulation 2, CRD, CRR. So usually these rules go in iterations.
Peter, one more topic or subject that you have been quite vocal about is tokenization.
Yeah.
You have been pro tokenization since day one, and you have tried your level best to get it adopted and as soon as possible. And one of the key areas where we are seeing these tokenized versions of assets trading is, of course, stocks. In EU as well and in US as well, we are seeing stocks getting adopted. But for some reason, we are not seeing the hard assets like real estate or maybe wine collections or maybe antiques getting picked up so well as compared to the money markets. I can say maybe bonds, treasuries, or stocks. So what do you see is lacking there, which is actually kind of delaying the tokenization and fractionalization of these hard assets, actually, like real estate?
Well, real estate, while it could be tokenized, for example, real estate, could be tokenized. Of course, real estate is very complex because it has to deal with property laws and deeds and notarial acts that often go back generations. So in developed urban and even but take urban areas with centuries of history, it's very hard to move from a traditional ownership structure into a tokenized ownership structure. And what are these tokens? Are these tokens natively the ownership titles of this property? Are they they represent the claim that somewhere sits in the traditional system? Where we see, if I scan around the world, for example, if we see greenfield developments of real estate For example, in the Middle East, you see much more potential because there's not a lot of history. They build new cities, the infrastructure's essentially in the desert, so there's no long history. So that you see potential there. But really, if you look at tokenization, my personal view is that everything can be tokenized. I think that everything will end up being tokenized. How long it will take, it depends. Some people say, well, it's going to be the illiquid asset classes first. I'm not convinced. I think you really see two trends. On the one hand, you see an efficiency push trend. So the financial industry is looking for efficiencies, and current financial markets, while they operate, have huge inefficiencies when it comes to clearing and settlement and capital lockup and capital use in these processes. So they want to become more efficient through tokenization. But we also see, especially digital natives, having a big interest in tokenized assets. So they want to diversify away from crypto assets. They want to go into traditional assets, but they want the form factor of a token, because that's how they like. They like 24/7 trading, and this is leading to this, what I call it, is a pull factor to pull the market ahead. And so both play. So if you look at the efficiency, probably the most efficient financial markets which we have are equity, large cap equity. So you'd say, well, there's no real immediate need to tokenize them because they're already quite efficient and they're very liquid. But also there you see this interest. For example, there was a huge interest with tokenization of SpaceX shares. Didn't quite work that well, but you could see a very big market interest. And because markets will move to tokenization if a number of conditions are fulfilled. And my own view, this is again my own view as an observer in this, is that the markets will move to tokenization once the buy and the sell side are interested and ready for this. So they need to want it. The issuers need to want to issue in tokenized form, and the buyers need to want to hold tokenized instruments. The infrastructures need to support it. So you need to have infrastructures that support it. Then you need to have cash on ledger because you need to settle this. It could be stablecoins, could be tokenized deposits. It has to be tokenized forms of money. It can be central bank digital currency, but you need those. The assets, tokenized assets, need to be accepted as collateral because professional investors really only are interested in assets that they can use as collateral for other activity. If a tokenized asset is not accepted as collateral, professional investors are not going to be very interested in them. So the collateral recognition of tokenized assets needs to be there. And then I would say for the financial sector, in particular for banks to be involved, the capital requirements for tokenized asset exposures have to be realistic. If they are punitive, banks are going to stay away because it's too expensive to deal in tokenized assets. And some of the standards that we currently have, like for example the Basel standards, do put a heavy capital burden on exposures towards tokenized assets. And then finally, I would say the regulatory framework has to support and enable this. To me, this is the least important of all of the conditions that have to be met. And while 5-6 years ago, none of these conditions were met, there was really no interest from the traditional financial sector into this technology. I see that in the last 5 years, and especially in the last 2 years, a huge movement towards meeting these conditions and moving there. So while it may not all happen next year or in 2 years' time, I think the financial world, will look very, very differently in 5 to 10 years' time. That's what I believe. Of course, we'll only know in 5 or 10 years' time whether my prediction or my belief will come true. I can't predict the future. I can only speculate as to what may happen.
No, from what we are seeing, your predictions are actually already going in the right direction, because the point is SpaceX IPO, it was this time not only just promoted by the existing US brokerage firms, but it was also kind of promoted by the existing crypto exchanges. So this time there was an, of course, added liquidity in the picture. And earlier, SpaceX stock or share would have been accessible to only people who had access to these applications, these
Yeah.
brokerage firms. Now they are accessible to even somebody sitting on Hyperliquid, or somebody sitting on Binance, or somebody sitting on an regular crypto exchanges. And most of the audience in crypto is actually unbanked. Many of them have never used a bank yet. They are receiving their salaries in stable coins, they're storing it on some private wallet, and they're spending, they're using these crypto cards. So there is a whole ecosystem which seems to be working now. So my question was, do you really think that in the next 5 or 10 years we will see the same mainstream adoption of tokenized real estate as it is happening for equities now? Or do you see that it might take far more time than we expect?
Real estate is a very, I'm not a real estate expert, but I know that if I look, for example, in mortgage market, um, the reason why mortgage markets move so slowly is not because of the credit part, the lending part, the financing part, but the title part, the ownership part, the claim, the collateral part, how this is mentioned. So imagine that you have to move a system which is based on notarial deeds into a blockchain. Um, it's immensely complicated. The lawyers will have a field day on sorting this one out. Some of them will probably go insane trying to figure out how to make this all work. So my own sentiment is that this will take a longer time because real estate is so complex and is so uh, burdened by history and legacy, if you wish. Therefore, I think it's going to be very, very difficult to tokenize existing real estate. But new developments, greenfield developments, I do see a lot of potential for doing them straight on blockchain. I generally think that, and that would then also allow for example, financing infrastructure, because these tokens are very mobile. They're almost like bearer instruments. So you can basically sell property titles or participations in real estate developments, infrastructure developments. For example, in the Middle East, but you could sell them anywhere in the world. So people could sort of say, well, look, I want to get exposure to some of those developments. Whether residential real estate is going to be tokenized soon, I don't know. But commercial real estate and infrastructure real estate has huge potential because they have much more, I would say, manageable cash flow. So if you have commercial real estate, that commercial real estate generates cash flows. And so these tokens generate cash flow revenue. So I can see definitely this happening, although we may see an intermediate step where rather than tokenizing the real estate directly, you'll have real estate funds. So the funds invest in the real estate, and then the
Yeah,
funds
REITs.
themselves tokenize their participations. So I think that that's an easier step to make than to put the real estate directly onto a blockchain. That's again my personal view on this, and
Yeah,
I'm
I
not an
mean,
expert.
so there are certain countries which allow you uh, for foreign ownership up to 100%. So
Yeah.
for them, I mean, it might be quite easy because they already have that kind of a framework that allows people with different nationality to actually own something in their countries. While countries which do not have this framework, I'm sure they don't even have a law or any kind of a regulation that can first of all allow a non-on-chain, kind of a ownership, then finally moving on to blockchain. So yeah, it seems like it will take a lot of time, but just like you said, lawyers are having a good time during this time, because right now there are a bunch of so many tokens coming in the market which are claiming that we are backed by real estate, we are backed by RWA. And when you read clearly, when you see their documents, you can see that this is not actually an ownership that is being transferred. This is just some form of utility, some form of, let's say, commitment packaged as utility. So they are claiming these are utility tokens, and people are again falling respectful to these things.
Mm.
So, I mean, in real estate, we might soon need something that can actually protect investors, because everybody loves real estate. They want to invest in it. When you allow somebody from Asia to invest in real estate in EU, they will jump onto it. But these current flavors, they do not have that required regulatory guidelines to actually protect them.
But time will tell. And of course, a year, 2 years, 3 years is
Mhm.
like a lifetime in digital asset space, in crypto space. But if you think about it,
Yeah, it is. It is.
Bitcoin emerged technically 2008, 2009, really. It was very, very niche, very, very nerdy up until it really started gaining some, I would say, more public attention. 2015, 2016. First time I ever heard about it was 2017. This is just 10 years, not even 10 years ago. Then we saw people, oh well, what is this? Then when we started with MiCA, people said, why are you doing this? Why are you wasting your time on this? This is nonsense. It's never going to work. Now we see, oh well, everything's going to be tokenized. So I'm not surprised that it takes a bit longer, because it's really, in the greater scheme of things, 10 years really isn't that much to convert a market into something else. And of course, people want to go for real estate because it speaks to the imagination. It's one of the most legally, one of the most complicated areas. It's like sort of saying, well, we want to fly to Mars, and we're going to have a practice run, and therefore we're going to fly to around the sun first. Now, if you want to fly to Mars, maybe the best thing to do is, let's start with taking a trip around the block, and then to a few blocks, and then you have to sort of develop this and see how it goes, and then go further and further. So I think that over time, when people become more used to tokenized assets and the legal implications, and whether a token is indeed a ownership title or a claim or just a representation of something, once these things start being clarified into the legal systems of different countries, then also the more complicated area of real estate will also come. So I do think, and I do believe that I will live the time, I'm not that old, that I will live the time to see very significant developments in real estate tokenization. Um, Whether I will still see this in my professional life or only after I retire, I'd say that's going to be borderline. I'd probably be retired by the time this really starts happening.
So there are attempts being made. I mean, we are personally part of at least two attempts right now. One attempt is from a family office based out of US. They're trying to tokenize their apartments based out in US. They're trying to tokenize their islands, which are yet to be developed. Then in India, we are engaged with a state government that is trying to right now tokenize state assets, public assets. And they are seeing it as an advancement to the public triple P partnerships, public private partnerships. And that seems to be a very novel idea that people can participate in it now. But again, as I said, I mean, the existing land of the law they are not that equipped to actually handle these kind of discussions. But yeah, there are attempts which we are seeing, and as you rightly predicted, that in crypto things move really fast. So maybe soon we will have something. So, Peter, another thing that people wanted to know from you, we actually put out questions. I mean, we actually put out the promotion that Peter is coming on the podcast. So they wanted to know from you that what does the roadmap look like for the next 5 years when it comes to particularly European Commission and digital assets? What more they can expect in the coming years?
Um, well, a lot of people think that we have a master plan, that we've got it all laid out. Um, we don't. We we launched the public consultation on MiCA, and we really
Hmm.
want to know from market participants,
Hmm.
what do you want? What do you need to develop this further?
Hmm.
That's why this consultation is so important, and I encourage everyone who has views,
Hmm.
and certainly those who can substantiate their views with facts, with data, and so on, with things they're building, to come
Hmm.
forward and to explain to us what is working in MiCA, what is not working, or what should Europe do to enable and empower this ecosystem conversion of finance. And we will take our decision on what we're going to do based on the input which we receive, but also on the input on the market develops as we see it. I do think that we're going to see very, very significant amount of work on tokenization of financial instruments, equity, bonds, derivatives in the years to come. Whether this requires a lot of regulatory action remains to be seen, because my own understanding is that there are not that many regulatory barriers to this. People often say, well, we're not doing this because the law doesn't allow us to do it. And then if I check into our rules, I see nowhere a prohibition or an inhibition. So if people say, well, look, we can't do this because Article X, Y, and Z of that regulation prevents it, they have to come forward and tell us and demonstrate that this doesn't work. And then we will try to resolve those problems. So I think in the next 5 years, you will see a lot of activity on digital assets, tokenized financial instruments, tokenized real-world assets, policy development. That policy development may also be regulatory development if regulatory development is necessary, and that can be enabling regulation to facilitate this. What I also expect, and I see already a lot of developments there, is that in the past, we saw the crypto industry being pitted against the traditional finance industry, and we like a competition. And they cancel each other out. What I think is we're seeing now a convergence of TradFi and DeFi, or crypto industry and traditional industry, where both sides can really learn a lot from each other. The crypto industry can learn a lot from the traditional finance industry when it comes to risk management and economic cycles and credit risks and market risks and so on. Traditional finance industry can learn a lot from the use of decentralized technologies, 24/7 trading, these activities, the dynamics, how the liquidity is done there. So I think both sides can reinforce each other. And that is to the benefit of market efficiency and ultimately to the benefit of the users of financial markets. Because financial markets really do not serve their own interests. They are there as a utility for the wider economy. Finance for finance sake is a bit pointless. Of course, some people make good living just moving around money, but that really isn't the purpose of the financial system. To me, the purpose of the financial system is to finance the real economy. Wall Street at the service of Main Street, to use an American term. And while financial markets, especially in Europe and in the US, are already very efficient, in emerging and developing economies, we see more work to be done. But of course, there's also a huge opportunity, because emerging and developing economies can leapfrog. They do not have to go through the legacy infrastructures that Europe and the US in particular have. They can go straight into tokenized assets. So there's a huge opportunity. And I think that in Europe and in the US, we have to be extremely vigilant of this, because otherwise we are no longer going to be the financial centers of the world, and the financial centers of the world will be in India, in China, in Southeast Asia, because the dynamics I see in those markets are so much more powerful than the dynamics I see in Europe. And this is a good thing, because this leads to positive competition. Not unfair competition, but positive competition. Who can do this best? And so this convergence between the two sectors, but also the ability to unlock the potential of Asia. And the numbers in Asia are just staggering. You're from India, like everything is bigger. You have cities with more people than we have. Just the city has a bigger population, highly educated population, compared to many countries in the EU. So just the numbers and the potential are so enormous there, that I think there are great opportunities ahead and great challenges ahead. But challenges are there to be overcome. Opportunities are there to be seized.
So one of the key reasons for the people in Asia to actually build out of European Union or Europe particularly has been that Europe is quite fast when it comes to regulations. They are quite fast when it comes to innovation. While in countries in Asia, many countries, including India, even including some countries in Middle East, you might feel stuck if you are an entrepreneur or a builder, because you know what needs to be built, but you don't know that how to go and market it to the people. So in that sense, EU has always had an edge, and that's why so many Asian founders have actually built out of EU. Transact is one of the startups, amazing platform for off ramp and on ramp. Some more examples there. So I think EU already has that edge, and in the coming years, I think world will be relying on you to move more fast when it comes to tokenization or real estate. But yeah, European Union is going to be one of the key locations that founders seek, of course.
Yeah. It's something which is called in political science the Brussels effect, meaning that while
Yeah.
Europe may not be the most innovative place, it is the most
Mhm.
innovative regulator, and usually regulatory and policy frameworks develop
Mhm.
in the European Union first. And that's also
Mhm.
partly because of the way we're set up, is that we have the European Commission, the institution I work for, that is there to create rules that are common rules for 27. And our 27 member states are quite diverse.
Mhm.
And once you've come to a solution that works for the 27, that means that it's a compromise that takes account of all kinds of possible perspectives.
Mhm.
We go to all kinds of iterations of perspectives and permutations of perspectives. Once you reach that, that then usually means it inspires other parts of the world. So while the innovation may come from other parts of the world, the regulatory approach, the policy approach, usually gets designed in Europe and then emulated across the
Yeah. Yeah.
world. And we see this in many, many sectors. That if you go to what is the
Mhm.
origins of um, banking law or the origins of securities laws in Asia, and you trace it back, you'll come back to European principles.
Mhm.
And the same is happening in crypto assets now. We see MiCA being emulated
Yeah. Yeah.
the world over. I sometimes joke, as I said, well, I'm looking for a copyright lawyer because I feel that other countries are infringing our copyright, but there is no copyright on law. So,
Now, EU provides you a market as well, while these offshore countries that are trying to replicate the model, they are just there to just kind of test your ideas for MVP phases.
yeah,
But if in case you really want to reach out to a billion users globally, then you will need something as resistant as MiCA. You cannot
yeah.
do that by using some offshore licenses or something like that. So
I,
that is pretty
I,
much well known throughout the globe. Yeah.
I agree. And if you look at MiCA, so we of course encourage and we try to encourage the innovation. But we also sort of said, look, guys, that's a great
Mm.
idea, but don't blow up the system. Like if you go to implement this without any guardrails, you're just going to go off the road, off the tracks. This is going to end badly. So sometimes
Mhm.
you need to have some constraints because markets at scale have very peculiar behaviors. And often
Mhm.
builders who are creative people don't necessarily know or understand how markets at scale really operate and what financial stability really is, or what prudential regulation really is for, and why we have it. Um, and that is something that Europe has learned
Mhm.
over the years, often painfully learned, but we have very good lessons for it, and that's something which we contribute to society, and we experiment with the regulations. Say, well, we can do this, and we then see other parts of the world emulating this,
Mhm.
and I think that's a good thing.
So, Peter, one last question. We are seeing everywhere, whether it is US, whether it is Middle East, MENA, whether it is even APAC, we are seeing that there seems to be a competition between central bank, between the existing SWIFT system versus what we are seeing being built on stable coins, being built on these crypto payment rails called blockchains. How is the perception in EU? I mean, is European Union also facing the same struggle, or is it in some way different as compared to other parts of the world? Because globally there is a struggle on the yields, on the rewards, on the deposits. So there are too many of, let's say, ifs and buts when it comes to regulation, that private players are right now in a pause phase, that okay, let's first see what is happening, then we are gonna put the big money in. So is it the same situation in EU as well, or is it different?
No, absolutely. There's something peculiar is that central banks are very similar the world over. And so they see this develop. Traditionally, central banks conduct their policy through the banking system. And now you see payment and finance rails being developed outside of the banking system.
Yeah.
And this gives central banks power because how are we going to play a role if we lose part of our levers into the market? My own view, for what it's worth, is that central banks really are underestimating themselves and they should not be as fearful of this development. First of all, fearful or not, it's going to happen. This technology is
Yeah,
so powerful
it's a
that
different user experience. Yes.
you can't contain it. People are going to do it. So if it's going to happen, you may as well embrace it and don't underestimate yourself and think, oh well, if part of the banking system is going to move into tokenization, or if the banking system itself moves into tokenization, which I do think will happen, thinking that then, oh, central banks will lose all of their tools to conduct monetary policy, I think is false. They may have to adapt their tools. There will be new market dynamics, but I think very, very highly of all of my of my many central banker friends, and I often tell them, you're underestimating yourselves. You're really being too fearful. You can deal with this situation. The world changes all the time, and why would you not be able to conduct your role uh, in another setting? You really are much smarter than you think you are. So I encourage them to embrace this development because it is unavoidable. But we have this debate indeed. We see central banks across the world being very hesitant about this because they're uncertain as to how it's going to play out. And yes, we do not know exactly how it will play out, but the fact that the future is unpredictable does not mean that you have to ignore the future. It's going to happen. The future is going to happen anyway. So you may as well embrace it.
Peter, thanks a lot. We have one fun question for you as well. Somebody asked us in the comments, so I might as well ask you: if you had $1,000 today, or let's say €1,000, where would you invest it in cryptocurrencies particularly? What will be your choice of cryptocurrencies?
Ooh, that's a tough one because the markets are a bit flat. Spot markets are flat. So if it's €1,000 and I could sort of blow it, I would put it on a prediction market. And I'm a big Formula One fan.
Okay.
I'm a big Formula One fan, so I would put a very big wager on a Formula One race.
So prediction markets are regulated in EU? I guess not yet, right?
No, but of course you see prediction markets now being implemented on blockchains as well. So that's what I would do. I may have to go through a VPN to access it, but that's if I had €1,000 to blow, that's what I would do.
They now have perpetuals as well.
Yes.
So you can blow more than you have.
I find it too complicated. I would sort of say, I'm going to, of course, it would be a very bad investment because I have my favorite driver and I put all of my $1,000 on my favorite driver because I would not take a rational decision. I'm just a Formula One fan. But that's what I would do.
Amazing. Great choice. Great choice. Peter, it was really fun talking with you. You helped us a lot to understand that how EU versus the rest of the markets, rest of the world is right now dealing with this new innovation. We would love to have you sometime again, where we can deep dive into more about that how particular businesses like crypto payments, stable coins, tokenization in particular, how other businesses can look at EU when they're trying to, let's say, raise funds, or they're looking for jurisdictions to set up their companies. Even right now, we are also doing the same. So in crypto, it is a dynamic world, even when it comes to regulations. You can see, you can see changes happening within months, and then you need to find relevant places for yourself. So Peter, thanks a lot. Thanks for your efforts on MiCA, and we would love to have you another time.
It would be my pleasure. Thank you very much.